Charles Pellegrini is here. That tickled you, didn't it?
It caught me by surprise.
Yes, exactly. We're going to start with the Federal Reserve. Decision to cut its benchmark interest rate, Charles.
The U.S. Central Bank lowered its key rate by a 0.25 percentage point as concerns over the job market edged out worries over inflation. However, debate within the Fed over which path to take in the long run continues, and this at a time of unprecedented political pressure. Luke Schrago explains.
A rate cut from the US Federal Reserve to a range of 4 to 4.25%, the first in 9 months.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point.
Fed officials have been walking a tightrope, balancing concerns over the labour market and inflation against a backdrop of political pressure to cut rates all year and ease the burden on consumers and small businesses. But job growth has slowed sharply due to sluggish hiring, dropping from 130,000 at the end of spring to an average of 29,000 in the 3-month period to August, edging out the Fed's ultimate goal of bringing inflation down to 2%, a target it's now not forecast to reach until 2028. Brand new White House appointee to the Fed, Stephen Miron, was the only member of the board who pushed for a deeper cut, as the organization navigates the uncertainty from untested trade moves from Washington.
Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen.
There are 2 more Fed meetings this year in October and December, with officials signalling that 2 more cuts could follow.
So interest rates then, Charles, gone down a little bit. What does it mean for the US housing market?
Well, there's been a lot of hope pinned on lower interest rates leading to lower mortgage rates for prospective home buyers at a time where many people find current conditions unaffordable in the U.S. It's a hot-button political issue, and Donald Trump has used this as an argument in his pressure campaign to get the Fed to lower its rates. Well, it would seem that the expectation of a lower Fed rate already contributed to U.S. banks lowering their mortgage rates on average, even before the announcement was made on Wednesday. Last week, the average rate on a 30-year mortgage saw its largest weekly decline in the past year and sunk to the lowest level in 11 months at 6.35%. But according to Fed Chair Jerome Powell speaking on Wednesday, the rates would have to drop substantially more to have a more durable impact. Partly this is due to the fact that most people who currently have mortgages in the U.S., 80% of them secured mortgages when they were unusually low in the 3% range at the height of the pandemic. So these people aren't selling their houses, reducing the amount of property available and keeping up prices. So the housing shortage issue in the U.S. won't be going away anytime soon.
So what impact then has the Fed's decision had on the stock market, Charles?
Well, it's definitely contributing to equities trading higher at the open on the major European bourses. As you can see there, the Jackson Frankfurt up, leading the gains, up almost 0.9% higher, over 0.9% higher. Lower interest rates, meaning financing could be more easily accessible, making investments more affordable. That's what is making everything trading in the green or in the blue here at France.
Exactly. We don't do green font. Anyway, let's move on to something different. Meta boss Mark Zuckerberg showcasing a brand new pair of AI-powered smart glasses.
So this is part of the Facebook founder's strategy to cash in on AI by betting people will see this as a must-have accessory. This after billions of dollars have been so far unsuccessfully poured into the firm's Metaverse project, which aims to connect users over digital worlds using virtual reality headsets. He presented the new $799 Ray-Ban design glasses at his annual MetaConnect Developers Conference. The glasses, for the first time, include a built-in display screen and come with a neural wristband that allows the user to carry out tasks thanks to small hand gestures. They'll be available for sale in the US come the end of the month. Take a look.
I could go ahead and I could dictate with my voice. I could send a voice clip. But I've got this neural band, and it's silent. And now, and you know, a lot of the time you're around other people. So it's good to just be able to type without anyone seeing.
Yeah, dinosaur,
Yeah.
but I don't think I'd like to have my text messages on the right side.
No,
of my
you could
eyes
do.
like that.
You could do though, Charles. It's coming, you know. Won't be able to avoid it. Charles Pelling ran with Business on France 24.